Good evening, ladies and gentlemen. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading Satellite Office down in sunny South Florida. Today's date is Wednesday, February the 20th, 2013, and here is today's After the Bell Market Summary brought to you by WallStreetTrading.com, people. Want to first start off by taking a look to see how the indices closed today. We had a lot of action in the markets today, so let's go ahead and jump into this great video I have ahead for you guys here. The Dow Jones was down a little over 108 points here. The Nasdaq was down a little over 49 points, and the S&P 500 was down about 19 points today. If we take a look at the breadth on the market today, we had 4,984 issues declining on the NYSE, Nasdaq, and AMEX, and we had 1,253 issues declining. Advancing on the NYSE, Nasdaq, and AMEX. So just about a 3-to-1 breadth ratio in favor of the bears. So a little different tone in the markets today. Obviously, you can take a look at the chart right in front of your face in this, on the screen, and you can see that we had a nice reversal day in the markets today that basically took out the previous, let's see here, 1, 2, 3, 4, 5, 6, kind of 6 days of trading at least. So all of last week's gains and yesterday's gains wiped out all in one day. Yep, that must suck if you have been following that. And you could tell by the volume last week that we just weren't getting any buyers in there, which is what caused us to be a little bit cautious. If you guys recall what I was talking about on the Qs, which we'll take a look at here shortly, the volume was just low in that key area where we know that they've been trapping buyers above that level. So we're going to take a look at that here shortly. Let's go ahead and finish going through this SPY. So the SPY got rejected at the key 153 level that we've been mentioning in the weekend review videos, and now we're looking to break back below this little range that we had right here. Okay, we're looking to break back below this little 151.21 level, and most likely trade back down towards the bottom of the range down here, back down towards this 149.36 is actually our first target. Most people that are short this market are going to be short. Sometimes we're short, sometimes they shorted the close or whatever the case may be, and they're putting a stop at yesterday's highs. All right, so if anything, they're risking about, I would say, $2 on the SPY. So they're taking at least about $2 risk on the SPY. They're at least looking for a minimum of at least 2-to-1. So 151 minus $2 is 149, which kind of takes us near this area down here. We're looking for the SPY to at least go down to 149. Not saying it can happen. Not saying that it can happen. Tomorrow, but we will be looking for that first target to be hit within the coming sessions here. All right. Major thing that we're going to be looking for again, obviously, is a break below this 151.21 level. I do think that we will break below this 20-day simple and exponential moving average right here that's been rising. Maybe we do a little chop action tomorrow where they breaks below those moving averages, closes above it. A little up day on tomorrow's Thursday. A little up day on Friday, then they sell it back down. We'll see. All right, but this will be the first touch of the 20-day simple and exponential moving average since we've been in this whole little uptrend. So it's going to be very interesting to see. We haven't touched that 20-day moving average since back here when we closed on right underneath it right here since the start of the year back here December 31st. So we'll see. Let's see how the buyers and sellers act around this 20-day simple and exponential moving average, which will be around the 150, 77, 151 area. Obviously, if we gap down below that level tomorrow and we start holding below it, well, that will be bearish. If we open up flat tomorrow and we shake down a little bit and we hold those levels and we start reversing back to the top side, well, that could be a sign they're going to actually try to hold it, maybe at least for one session or maybe in the coming days here, then break it down. Remember, we had a wide range bar today, a lot of selling today, so it's going to take time for people to digest this move as everybody's going to be looking around to see what stocks take a short. See what stocks are holding up, etc. So therefore, we could expect some little sideways action inside of this little big bar here. But once this big bar breaks the low, once we break the low of this big bar below 151.21, call it 151, we start holding below that level there, we're going to be looking for that move back down towards these 149s, 149.50 area or so. All right, let's take a look at the triple Qs here. The triple Qs, again, are back below that 67.38 level. If you guys been watching the videos here, we've been talking about the fact how the triple Qs have been trapping a lot of people to the long side above this key level right here, about a couple times here. And now during this whole little rally that we had, we didn't have any volume coming in the markets. Take a look at the volume that we had down there, then take a look at the volume today on the selling pressure. So now, if the triple Qs continues to hold below, say 67, 63, All right, 67.38. We're going to be looking for the Qs to go all the way down back towards this key 66 level. All right, down here. And let's not forget, all this area right here is some, all this area down here below 66.17 is gap fill area, which could take us all the way down to 65.15, which is the little gap fill window right there. So triple Qs looks good to the short side. People are going to be looking to get short the triple Qs. I would say with maybe, they're risking about $1 right here or so. So maybe look for a 2-to-1 minimum, $2 to the downside. $2 minus say 67.19, call it 67. We'll be looking for a move down towards 65, which takes us to gap fill target. All right, so just some little different scenarios and targets that you want to have visualized out, so you know how to act if that was to happen. You know what stocks to go to. All right, and obviously we're going to be doing some nice scans tonight. And I think me personally, we have to, I'm going to be looking to short rallies now that we have the selling pressure today. Not looking to buy the dips anymore, but looking for stocks that are weak or stocks that want to roll over to rally up a bit, then look to short rallies, looking for, lower highs intraday on these stocks, and we're going to go from there. We're possibly still have this triple Qs pattern that could play out here from this little head and shoulders pattern. All right, that's looking like it could be in play on the weekly time frame, of the triple Qs here. So we're going to wait and see what happens. Remember, we do have this little rising, possible bear rising wedge on the triple Qs. It's going to be over for the triple Qs to the downside once we break below 66 and hold. But as long as we continue to hold above 66, we can continue to trade in this little choppy area right here and just chop around, until this whole pattern just plays out. And then if we get over 68.50 or so with some momentum, then we could be going back to the top side, back up towards those 70s or so. So in other words, we're looking for some more short-term selling. The triple Qs did break below the 20-day simple moving average and exponential moving average right here. So the next target for as far as moving averages go will be around the 66.85 and 66.60 again, which lines up with this first little support around the 66.60 area. All right, IWM, which has been the leader of the market, was down 1.86% today, the weakest index across the board, which makes sense since it is a leader, and we're going down today. People are going to be looking to take profits from that leader, and we're going to be using this as a gauge as well to the downside. In other words, if the market continues to sell, if the market continues to sell for the next coming days or next couple weeks, whatever like that, it's going to be that when the IWM, in my opinion, bottoms, that we can say, okay, we're looking for that reversal, higher low pivot. Higher low pivot. Higher low pivot to the top side. All right, people. So IWM, we're going to be watching this highs up here, of course, the 92.65 level, and then we're going to be watching back this 90.70 level. If we break below 90.70, we have some minor support from the key moving averages right here, the 20 EMA SMA on the daily time frame around 90.28 here. But most likely, if the IWM gets some selling pressure, we're going to be coming back possibly to this lower pivot back down here around 86, 68, 89. Which also take a look how we broke above this key trend line, and we have a possible bull trap that's breaking down here, trapping some longs that whoever was buying with this key trend line could be trapped to the long side right now. So we'll see. Any more selling pressure will have these people feeling some pain. And some people that may still be trying to hold will start to dump out, which gives us another nice little seller candle that we could be looking forward to. All right, so let's take a look at the dollar futures. The dollar futures were strong today. That's what caused for some of this weakness in the markets, of course. Dollar futures, looking like they're breaking out here, breaking back above this key 80 level here. And next target's going to be back up towards this 81.50 and then back up towards this 82 area here. All right, we take a look at the euro, which was weak today, and I showed you guys the channels in that last night. You can see the euro doesn't look too good. It's breaking down, and the euro looks like it maybe can go back to our little target down here from the little channel breakout that we called out back here in January. All right, that will give us a back test of back here towards that dollar 30 cent level, $1.30 half level. I'm not sure the lingo that you guys use in the forex, but 1.3055 is a target on the euro, especially if we continue to hold below this other channel line that we had in here that put in a lower highs. That's been putting in lower highs. So we continue to hold below this channel line right here, or just call it this 132.9 half level on the euro USD. We should be looking for some more selling pressure. Maybe back down towards that 200-day exponential moving average down there around 130 half. All right. Let's take a look at the commodity space now. Starting off with gold. Gold continues to get that selling pressure that we've been mentioning here, as we talked about this key trend line that was holding up right here. Had that nice little squeeze pattern here, and now we're breaking down. We broke below 1630, and we continue to get that extra selling pressure. One trend line that you want to watch in gold is going to be coming from this key little pivot that we had right here, pivot that we had right here, pivot that we had right here. We had the breakout right here, so this trend line is going to be coming into play right here, which is not too far away, which would take us down towards the 1546 level, which we could have some little minor scalpers trying to get involved in there. But in all, I think gold heads back down towards these 1540s, maybe 1525 or so. And then if you take a look at the monthly chart, gold could really go all the way down to 1500, which I think that would be the decent opportunity to buy it if you've been buying the dips. There's been a lot of people. I can't lie. There's been a lot of people that I watch on Facebook, just because I like to get different opinions on different people's work, and they're like, "Oh, we're buying gold today. I continue to buy gold on the dip, buy gold on the dip." And I'm not going to call anybody out, but buy on the dip, and next thing you know, look, they've been buying on the dips. They were buying on the dips above 1630, and now 4 days later, we're all the way down at 1564. So it just tells you that you always want to be patient and wait for these things to show you that they're done going down before you try to pick a bottom, the same way before you try to pick a top. All right, and I forgot to mention this to you guys in the SPY, but one thing I wanted to show you guys down here on the closing prices system that I use here was, look at that. We we got everybody juiced into the long side above this breakout right here from this little slow movement we had. We trapped them to the long side here on a positive close, and we didn't get any confirmation for a second day close, and now they're smacking it back down. So again, we're looking for the SPY to go down here towards these 150s. This nice little consolidation that took place right here that we lifted off of was around 140, 147 or so, which could be a target as well. All right. So let's go back to these commodities now. So that's how gold's looking to the downside. I know some of you guys like to track the GLD, so let's take a look at the GLD. GLD is coming back into this little supply zone. Sorry, it's this little demand zone that we have right here. But the GLD holding below 152. All right, the GLD holding below 152 could take it all the way down. First of all, we're going to be looking for this thing to go all the way back down to these levels right here, around 148.40. Now, I got to bring the weekly chart and the monthly chart over here real quick to show you guys something. You can see the GLD on the monthly time frame. It's back here, this little key demand support around this 150, 152 level. We continue to remain below 152. We're going to be looking for the GLD to continue selling going into the coming weeks, maybe even the coming months. And then you take a look at the weekly chart here of the GLD. You can see with that little channel line that we broke, we're back. We're kind of hanging back below that now. And again, this is the same channels that I showed you guys in the monthly time frame right here. The same levels. I mean, we're coming back into this little demand zone down here. So it's going to be tough to short gold down here. But at the same time, stick with the trend. A lot of people could be trapped to the long side on this, as a whole inflation trade and all that crap is not working out like most people probably expected. And now we're breaking back below this little key level. We broke back below this key level on the GLD from the breakout right here from this little nice little long consolidation we had, and now we're back at the bottom of that support and even trying to break below that. So that's not a good sign. Gold still looks weak, looks to go lower, and that's what we've been nailing it on the head with. Just gold doesn't look good. And it all started off with the miners, the GDX miners looking weak. Again, if you guys been watching the videos, not trying to, we're not patting ourselves on the back here, but we did help you guys maneuver through the market accordingly with the breakdown in the GDX ever since we talked about it not breaking out right here. Having this little lower base, showing the fact that it's been weak. All right, the fact that it was not able to go back up there and test that 44 level was showing you that the gold miners were actually weak. The fact that I was making this little range box right here was showing that people were actually holding a held offer on the daily chart around 43 because they didn't expect it to go back up to those prices, and that's just a bearish sign. And then once it started breaking down right here, we were talking about the gold miners to the short side. There's been a lot of decent action in the gold miners. I actually was able to make some money in Newmont mining short today, so that's some good action. And now the miners are looking like they want to head back to these 32.53 levels here. Again, I got to show you guys the weekly and monthly chart here on the gold miners, but the gold miners look like they want to go down to 32.53, which we should have some support from these levels back here in 2009 down there. And if you take a look at the weekly chart here, I have it from a little bird's eye view a little bit here for you guys. It's a weekly chart though, but from a little out zoom view here, you can see 32.53 is the level that we could hit down there, and holding below 40 is not good for the GDX. So miners, short the rallies in them. Intraday, short the rallies in them. Going forward, I was telling my guys that I'm going to be looking to short rallies instead of looking to buy the dips. Because I think the buy the dip crowd got spooked out today, and they're not going to be looking to buy those dips. And maybe they try to buy the dips again tomorrow, but then if it doesn't work tomorrow, they're definitely going to be done buying the dips, and we're going to be looking to reverse that and short rallies below these key levels on the SPY and the ES. All right, and you can see here on the ES, little same fluff up action. Remember, we had a little fluff up action. We hit our target for this next key trend line up here, and now they shook us back. So this is a monster reversal, guys, and something that warrants our attention. All right, SLV silver back below that key 29 level, breaking down, breaking below this little downward channel that we had in play. Of course, should have held right here. Doesn't mean we can't get back above 28, but the longer we hold below 28, the more we can expect SLV to sell down to the downside. You take a look at some of the silver miners, SLW. Frig, why the hell didn't I have an alert for this today? SLW breaking below that little key 34 range that I was talking about in last night's video, and I have a whole bunch of crap going on, so obviously I can't catch everything, and some things slipped past me. This one would have been an awesome short through 34, but we missed that. Anyway, SLW still looks pretty weak. Still looks like it wants to get some more juice for the downside. Keep that one on watch. Again, GG breaking down $1.30. Could go down to 31.52. Some of these miners, for the gold miners, Newmont Mining breaking below this key 32 level, and again, they have earnings coming out tomorrow after the bell, so this stock's going to be definitely in play for the next 2 days here. Keep Newmont Mining on your in play list there. So let's take a look at crude oil. All right, crude oil futures breaking. Crude oil futures, I'm not able to break above 98. Still doing all right though, because all it's doing basically is trading this little range here between 98 and 94. And if they break down lower, you can maybe see some 93 price action, or maybe even some 92s. One level that it could pull back to, which then I think will be a good buy in crude oil, will be back here down towards this 90, which was its resistance. We broke above it. We held it as support, consolidated on top of it at the beginning of the year. Then we broke out from there. So a lot of people that are long crude oil, a lot of smart money people, they're long from $90 a barrel. So keep an eye on crude oil. If it was to pull back to 90, they may be looking to add to that position for a nice little dip buy for a move back above 98. We'll have to see how that plays out. If crude pulls back, though, that could be a little bit good, because we have been seeing gas prices go up at the pump. And I sure as hell have been seeing gas prices go at the pump, because, I mean, I live in South Florida where you have to drive everywhere. Unlike you New Yorkers, where you guys can, take the subway and the train, all that taxi and all that good stuff like that. So anyway, USO, which obviously is not at the top of the supply zone, like the crude oil futures were, what do? They get smashed right against this 35 level. And levels to watch in USO is going to be down here towards 33.56. We have this nice little gap fill that's down here, all the way down here at 32.25. Not sure if you get all the way down there, but just know that 35 is the level you want to be working off of if you're looking to get short crude oil. And just know that you have those lower support levels down here, 33.56, 33, and all that extra stuff there. All right, that about it. Oh, can't forget about the VIX. Last but not least, the VIX getting a nice little pop up, holding that little double bottom down there, that key 12.25 level that we been watching. And if we can get back above 15, we can maybe see the VIX back at these levels up here towards 16 or so. Still doesn't mean it's at these elevated levels. We are breaking this nice little downtrend in it here that we've been in for the past 2 weeks, so we could have some nice, traction at least for a couple more days. But the play today was the VXX. The VXX. My partner called this VXX out in the room this morning, and the fact that I have a channel system on this VXX and I was not able to, I did not even watch it today, just is amazing. I mean, you guys can take a look at my channel system right here, but you can see how every time we got in this little channel right here, they sold it, they sold it, they sold it. Now today, they bought it. I got to fix this up a little bit here. Today they bought it. We held the top of my little other channel, the little red channel I was watching down here. As long as we held above that, it was a long. They consolidated in this little yellow channel range that we couldn't break above, as you guys, like I just showed you guys from the past, past couple of days there or so. And once we broke above this, volume came in, as you can see in the background, and it was off to the races. Too bad I was not focused on the VXX today. Again, you can't catch everything though, but we were looking at the volatility index, and it did. Some people in the room did catch that. I was not involved in that though. So that's about it, guys. I mean, let me go through a couple stocks here. Of course, Apple got smacked down today, down $11. We've been talking about Apple holding below 460 is bearish. And as you can see, Apple holding below 460 is bearish. You may have some people looking to get short Apple. put a stop above 460, so they'll be risking about, say, if they could get short tomorrow somewhere around 450, they'll be risking at least 10 bucks. Looking for at least a 2-to-1 trade. That'll be 20 bucks to the downside. 20 bucks minus 450 would take us down to 430, which is very well a reasonable target. So therefore, you could have some people looking to swing trade Apple short for the next couple of days, meaning that it still has some more downside. Let's take a look at the 60-minute chart. And oh yeah, this thing's got some more downside, guys. It didn't even break down today, really. It was pretty much just sold off a little bit on the open and kind of traded sideways and flagged out a bit here. Looking for a breakdown moving Apple tomorrow. So Apple's on watch for tomorrow to the short side, guys. Keep that one on your radar. Keep that one on your radar there. Amazon was trying to hold up, the past 2 days here or so. And this one, what did this one do? Didn't get smacked down, but opened higher and sold off. Opened higher, ran up a little bit, then sold off. So a little shakeout, possible little bull trap action right there. As long as Amazon can continue to hold above this 262 level and hold up a bit, we still think that Amazon could possibly be a nice little buy back up towards these 280 levels. Obviously, we're going to need to see the market hold up. But if the market was to correct and this one was to continue to hold above 260, or when the market was done going down, we'll be looking to buy Amazon. So those are just different scenarios that you want to have planned out and mapped out already in your playbooks. Which reminds me, we're going to be doing a webinar on how to develop a playbook. I'm going to be setting that. I was supposed to do that this week, but I'm going to be setting that up for sometime next week. All right, sometime mid next week. I'll let you guys know on that. Make sure you go to our website, wallstreettrading.com, and follow us on that right there. Goldman Sachs continues to hold these moving averages right here, these short-term moving averages. But unlike the SPY, which broke those today in the Qs, we're going to be watching these banks, see these banks start to roll over these short-term moving averages that they've been holding since the start of the year. So Goldman Sachs, let's take a look at the 60-minute chart here. Definitely looks like it can get some nice little selling pressure, so keep an eye on Goldman Sachs. Really no level needs to break and hold below is 153.80, call it maybe 154 or so. Let's see here. Let's take a look at some more of these banks here because they have been the leading sector. JP Morgan, little fake breakout above this 43.35 level, and now we're back below it. If we continue to hold below 43.30 or so, look for this thing to sell back down towards the bottom of the range, back down towards 42. That's on Citigroup. I thought I said JP Morgan, but I'm talking about Citigroup. JP Morgan broke below the fast-moving averages right here and closed below it. So JP Morgan is definitely showing some weakness as far as these stronger banks that have been performing pretty well. JP Morgan's one that you may want to smack tomorrow along with Citigroup, but the financials continue to pull in after having these nice gains for the start of the year, or so I should say, since they started rallying back here in November. Bank of America, let's take a look at BAC. BAC not able to break and hold above this 1225 level, pulling back. Could always pull back down towards the bottom of the range down here towards $11, which I think that will possibly be a good area to scalp Bank of America to the long side down there, which is 80 cents lower. Let's take a look here. What else do I want to take a look at? Some of these home builders, the home builders got smacked down today. So make sure you take a look at some of these home improvement stores. See if they maybe start to sell off a little bit. Home Depot and and Lowe's, which this looks like some good shorts here. They've been on the tear. And take a look at the 60-minute chart. These ones, Lowe's broke down below 39. So we could look for maybe a little short rally. And this one looks to short it. And Home Depot. Let's see Home Depot. Let's see the key level on Home Depot. Key level on Home Depot is the key level on Home Depot looks to be around the 67 level, where it has like a little head and shoulders pattern that possibly could be in play here. Sloppy one, but we maybe look for this one to rally back up towards 67 and then look to short it. All right, so just different scenarios that we're looking at, but all in all, the home builders were weak today. We do have some key numbers coming out tomorrow, so keep an eye on this one. Wow, Toe got smashed today. Lennar, they do a lot of business in Miami for Miami Homes. This company, this one broke down below 30, 39, 25, call it 39, and got smashed today. Let's take a look at some of these IYR real estate stocks. SPG, PSA, they're doing whatever. Home builders were weak. Caterpillar came out with some news today talking about their sales. Their equipment sales were down. This stock was a nice stock to play today, holding below 94. I was calling this one out left and right in the chat room today and on the Facebook and Twitter page. And this one was a nice short, holding below 94 was a key level. And now Caterpillar, even tomorrow, looks like a good short, like it wants to go down to this 91.23 level. Now I'm pretty sure they'll probably gap it down tomorrow, but we're going to be looking at short rallies in Caterpillar. And I think this thing wants to go back down to gap fill window down here at 89.60. So Caterpillar remains on short watch. Baidu got smacked down today. BIDU. This one looks like it wants to go back and break below these little lower levels down here, 85.96. This stock on the monthly chart, let me bring this over here for you guys real quick. This stock on the monthly chart, is sitting right on the 50% level of the full move that it had when it broke out back here in 2009 to these extreme highs that we made back here in 2011. So now, is this a tech bubble type of stock or a tech bubble type of story? We're here where Baidu was on fire. It's a hoorah stock, and now it's getting smacked down because China's slowing down, or the restrictions that the Chinese people are putting on Baidu starting to take effect into the companies, to what they could do, stuff like that. Whatever. Not sure if I'm looking at it too much, but either way, just know it's one of the weaker stocks out there. Know it's one of the weaker Chinese stocks out there as well, Baidu. You can take a look at some of these other Chinese stocks, CTRP. This one looks like it wants to go back down. This one's actually looking like a good short for tomorrow. Let's take a look at the 60-minute chart on this one right here. And this one looks like it had trouble breaking over 2025 or so. Stair stepping its way lower, so keep an eye on this one as well. First target would be 1980 towards gap fill down here, which is just 20 cents lower, but below 1980. This thing can be all the way down here at 1944, the bottom of that little candle right there. Let's see what else here. Energy stocks, ExxonMobil looked good yesterday. Let's see what ExxonMobil did. Still holding above that key 88 level. Chevron, SVX, still holding above that key 114 level. Schlumberger, SLB, not looking good. I don't like how this one, got some people involved to the long side for a break above this key 80 level, and probably trap some longs in there. Let me hide these jongs real quick, my channels. Bring up the 60-minute chart. You can see there's key support right here, though, at the 77.94 level, but it did trap some longs for anybody that's long above 80.18, and now if this thing breaks below 70.17, this could have a big down bar, as people are probably using a stop below 78 on this one right here. Let's take a look at the 60-minute chart, and there you go. Nice little range right here that we broke out of today to the downside, and this thing looks like it couldn't break and hold above these 78, so you can probably go short. 79. You could probably go short versus these 79 areas right here. So keep an eye on Schlumberger. Could be a nice little bull trap on a daily scale, on a daily time frame right there. And that's about it, guys. I have some more stuff for you tomorrow, but don't want to make the video too long. Hope you guys had a great day today. We had an awesome day in the chat room. A lot of profits. If you're looking to be part of our trading group and you're looking for a prop firm to trade with low commission rates, high splits, and all the other good stuff, and good resources to work with and people to communicate with and mentor with and coach with, contact me at cooper@wallstreettrading.com. And I'll definitely be able to answer your questions. If you want access to our chat room, contact me at the same email address or go to our website and sign up for the 14-day free trial. I believe our CRM is working for that now, so that if you input your information, you should get an email out within the next 5 minutes or so with the credentials to log into the room. I had to double check that today with my partner, but everything's on the up and up. Hope you guys had a great day. Peace out.